market was nervous all day with all eyes on the Fed meet later tonight in India time. The two-day FOMC meet ends today, and while most expect that interest rates will be left untouched, experts are looking very closely at what kind of commentary will come in. I have with me now Hugh Johnson joining us for his views of what to expect. Mr. Johnson, thank you so much for speaking with us. What do you think we will hear from the Fed later today?
Well, you're not going to hear anything that's very eventful. You're not going to hear any big surprises, I don't believe. I think the Fed's going to obviously reiterate that their current stance on interest rates is they're going to preserve that range of 0 to 25 basis points. They may say something, if prompted in the press conference, about negative interest rates. I don't think they'll say anything in their statement, but in the press conference, they might reiterate that they are not going to move towards negative interest rates. Other than that, I don't think you're going to see a whole lot. We have the quarterly estimates by members of the Federal Reserve Open Market Committee as to what they expect for the federal funds rate and a number of other variables to include the economy and inflation. I think those numbers are going to be all over the lot, but eventually you're just not going to see anything, I think, that's particularly exciting, other than to say, and I hope they will say, that they're going to continue to have very accommodative monetary policy. In other words, 0 to 25 basis points until conditions improve or we see clear evidence that the economy is starting to recover. The jobs report, 2.5 million on the plus side, good news, but that's not enough. They're going to need more to be convinced that the economic recovery in the U.S. is sustained, and then they might make some changes.
Mr. Johnson, the markets, the U.S. markets at least, seem very optimistic and very convinced. The NASDAQ at new highs today on opening as well. So what are the markets looking at from the Fed, or are they on their own sort of trip?
No, I think the markets are looking at the Fed and saying the Federal Reserve is going to do pretty much what I just said, which is they're not going to change interest rates, not only at this meeting, but in the foreseeable future. In other words, monetary policy is going to remain accommodative. They might do some things such as trying to manage the yield curve or trying to add liquidity to the financial system by buying securities from, corporations and mortgages. But I don't think they're basically, the markets are saying the Fed is going to be accommodative. That's going to be helpful to the economy, and that in the future, we're likely to see better employment numbers and positive numbers, broadly speaking, on the U.S. economy. The markets or investors collectively are very optimistic, and I might add maybe a little bit too optimistic. That is, things may have gone a little too far too fast, but nevertheless, markets, investors are very optimistic about what lies ahead for the remainder of 2020 for the U.S. economy.
What are the factors, Mr. Johnson, that you would be looking at very carefully that the Fed talks about? You mentioned the unemployment rates and about how it might be premature to think that the U.S. economy is in recovery mode just on the unemployment figures. What are the other factors that you would be looking at very carefully and the Fed would be looking at?
Well, first of all, you want to watch very carefully what the Fed itself does. When they add liquidity to the financial system, you want to know that that's part of a program, and that is obviously going to help. What they do as far as buying securities, and this has been really unprecedented, the amount of buying they've done and injection of liquidity reserves into the financial system. So you watch that very carefully to see if there's any change. And then, of course, you watch all of the numbers. For example, you watch very carefully the inflation numbers. The inflation numbers were disappointing today. We got consumer inflation. Consumer inflation the headline number showed a decline. That's not good news for a Federal Reserve that would like to see the rate of inflation go up. So that really clearly, it tells you that this is a factor that the Federal Reserve is going to continue to maintain accommodative policy and cross their fingers that inflation gets a little bit higher, that we don't have to deal with deflation, which is the big worry. And then you watch all of the other numbers. Purchasing manager indexes are really valuable in trying to determine how the economy is doing. They'll watch that very closely. So all the economic, all of the inflation numbers, and then on the basis of that, Watch what they do. And I think what you're going to see for the foreseeable future is they're going to interpret this just the way I'm interpreting it. They're going to say policy will remain accommodating.
Absolutely. Thank you so much, Mr. Johnson, for joining us on the show this evening.
My pleasure.
We'll take a very short break at this point in the India development debate. When we come back, the most discussed story of the day. How will the next Parliament session look like? Plans are afoot to have a virtual monsoon session in Parliament, or maybe partially virtual, partially with the MPs there. So will they all attend now? What about the ruckus? Will we see no ruckus in Parliament? That story coming up next.